Yo, what's up, everybody? It is Thursday, September 28th. One more day left in the month, one more day left in the quarter, one more day left in the fiscal year. So we had another update in the market as I was expecting. If you go back and you watch my video, I think from last Friday, I said that this week would be a positive week because the flows would be supportive of the market, and that's exactly what has been happening. We had yesterday a very strong day. Of course, it was a Social Security payment day. We had a 44.7 billion leading flow. That's really good. We had a, what was it, like a 25 or 28 billion net flow. So right now, what's left over from the tax drain on September 15th, I think it's something around 45 billion, very manageable. Tomorrow, I believe the first of the month payments will go out. That's a big day because, you know, that's all the biggies: Medicare, Medicaid, military pay, veterans benefits, disability, all that stuff. That's like a 95 billion net flow day. I think it goes out tomorrow because the first is on Sunday, so we know it's not going out on Sunday. It could go out on Monday, I don't know. But anyway, that flow tomorrow, let's assume it's tomorrow, that will not only recover all of the tax drain, it'll put us ahead. Now, I want to say something about the government shutdown, which looks likely at this point. I read some stuff that the government is already sending out notices to federal employees to expect a shutdown. So it looks like that's going to happen. I went back to my data back in late 2018 to early 2019. That's when we had the shutdown under Trump. That lasted 34 days. And I took a look at the daily flows. And I have to say that there really wasn't much impact whatsoever. I mean, I really couldn't see. I analyzed the period before, I analyzed the period during the shutdown, and I analyzed the period after, and there wasn't much variance in those daily flows. I mean, there wasn't. Now, if you go back and if you look at what the market was doing at that time in late December 2018, early 2019, it was going down. But that's because the Fed was raising interest rates at that time. And of course, we had the crazy monetarist zombie reaction selling the market. But it had nothing to do, as far as I could see, with the shutdown and any sort of negative impact on the flows. So I'm anticipating the same thing. Now, let me say this. If the market goes down on the failure to come up with a continuing resolution to keep the government open, if the market goes down based on that report or that reality, I think that's a buying opportunity. You know, the market is very short. Investor sentiment is very negative. By the way, I sent out today to my subscribers the weekly AAII sentiment survey, which, I mean, we had a real, just like I was saying last week, we had a real spike in negativity. And where do you think it came from? It came from those neutrals who were sitting on the fence, diving into the bear camp when the market was getting sold off. It's fascinating to when you have self-control and, you have the right behavior when it comes to investing. I have to say, at least for me personally, I find it fascinating to watch the behavior of the crowd, the masses. Because this is why I tell people, like, go against emotion, because every single time you could see it, how they do the wrong thing. I mean, you could see it in these sentiment surveys. You could see it in CFTC commitments of traders data that comes out every Friday. I mean, you could definitely see where they chase after prices on the upside. and where they panic and sell into the hole on the downside. I mean, it's fascinating because it is the same repetitive behavior over and over and over again, which says that's natural human behavior. Like this was my whole video yesterday basically was about you gotta go against that. I mean, that is natural human behavior. People get scared. Fear is a huge motivator. The market goes down. They don't see it. That's why I was talking about reframing. You got to reframe that as something positive. You know, somebody I think posted a comment here yesterday, said, Mike, I don't agree with the reframing because if you see like in a flea market or something, you know, people are excited by lower prices. I totally agree with that. But this does not, for some crazy cockamamie reason, that same behavior isn't evident when it comes to investing. People do exactly the opposite. They chase after when it goes up and they panic and they sell out when it goes down. Look, you have control over your mind. And it is imperative that you use that control to keep you on the right side of things. I mean, if you allow your emotions to dictate your behavior, you're finished, you're lost. And I don't care if we're talking about investing, I don't care if we're talking about business, I don't care if we're talking about relationships, I don't care if we're talking about, doesn't matter. You have to rein in, you have to control your mind. You have control over your mind. And you can't be flipping out, and you can't be getting emotional. And as a corollary to that, you have to be educated enough or experienced enough to see when everybody else is doing that. And it's not hard. Like I said yesterday, I pointed it out yesterday. I said, to me, that was very, very easy to see that was like a panic selling day. And sure enough, like it shows up in the data, it shows up in the surveys, all that stuff. And that's not, you know, it's not like a one-time thing. That's going to be around. That's why I always say to people, like, if you miss out on an opportunity, if you miss out on a trade, you know, some kind of investing opportunity, I say, don't worry over it. Don't fret over it. Don't get all, you know, tied up in a knot over it, because something else is going to come along. It's a repetitive thing. It constantly happens. In the beginning of my career, if I missed something, which maybe, you know, I had been preparing for as an analyst, I was very, very intense as an analyst. Like I'd study back then the charts, and, you know, I was preparing for this is going to break out, or this is going to break down, or whatever, and there's a moving average, something. You know, I was using stuff that really is not very useful, but I was still pretty good as an analyst. If I missed out on a trade, or if I got a little bit of a profit and then I got out and then, you know, it kept on going, I would beat myself up to no end. And that is such a bad reaction to something like that, because all that does a couple of things. First of all, it kills your self-confidence and your self-esteem, because you kind of program into your head, gosh, I'm an idiot, I'm a jerk, look at what I did, I left all this money on the table, blah, blah, blah. And that's not even the worst part. I mean, maybe that is the worst part, because that once you start impacting your self-confidence and your self-esteem in a negative way, then it sets up a behavioral pattern where the next time you're going to do something, you go in there with even less self-confidence. And so that's not going to work out. And then the next time you go in there, it's even less. Each time, you know, you chip away each time at your level of confidence and your level of self-esteem. So you become like a failure mechanism. But the other thing that I used to do is then, you know, I'd get out, and then when it kept on going, I'd emotionally jump back in saying, what an idiot, you know, instead of just saying, okay, I screwed this one up, I'll be better next time, I'll learn from my mistake. No, I would jump back in. Of course, where would I jump back in? After the market had already moved, I'd get in at a terrible level, then it would start to go against me. Then I would jump out. Then I would take another loss. Then I'm like, you know, what did I do? I'm an idiot, blah, blah, blah. And it's this repetitive pattern, which is so self-sabotaging and self-defeating. It's like poison. But this is why I say, like, you never should fret or worry or be disappointed if something passes you by, because, you know, something else is going to come along. I used to think, like, nothing is ever going to come along like that thing that I just saw. And sure enough, you know, a couple of weeks later or a month later or 6 months, it doesn't matter, something else even bigger comes along. It always happens because it's a pattern. It's a repetitive behavior. Actually, what we're doing here is we're taking advantage of people's bad behavior. Don't be one of them. That's the easiest thing I could say, is don't be one of them. So, I mean, I think we're good into October 15th. That'll be another tax strain. I hope we get a negative, a bearish reaction, you know, a little bit of a sell-off if there's a government shutdown. Because I'm gonna go based on what the data was in the 2018-2019 shutdown. That was, if you want to look it up, December 22nd, 2018 to January 24th, 2019. I'm going to use that as a, you know, kind of a baseline of what to expect. Now, if it goes on longer than that, you know, I don't know. But 34 days is a pretty substantial period for a shutdown, and I don't see how either party comes out of that looking good. So there's going to be pressure on them to get something done. But maybe it won't even happen. I don't know. The Senate has something to avert a shutdown, but again, it has to be, you know, both houses of Congress have to agree on it. So the House is not there. So I don't know. Anyway, I'm not worried. And even with the October 15th, that's also not a worry in the big sense, because once again, I'll say it once again, and I'm sorry to have to repeat myself every day, but this is how we learn. We learn through repetition. The overarching picture is bullish based on the level of fiscal flows, and that's not going to go away. The only way that could go away is if Congress, you know, passed legislation to dramatically cut spending. And that would have to include defense, Social Security, Medicare, Medicaid, interest pay. You can't cut interest payments. The Fed keeps interest rates up, and they're raising interest rates. So I mean, and they're never gonna not pay the interest, because these idiots, these morons, are so scared that we borrow dollars from China. I mean, this to me is still, to this day, it fascinates me how this could even be a thing. Like, we borrow from China. I mean, the easiest question, if somebody says that to you, you just say, we borrow what? And they're going to say, well, we borrow money. What do you mean, dollars? Yeah. How did the Chinese get the dollars? How did they get them? We had to give it to them. How did we give it to them? Because we bought stuff, and then they have dollars. We're not borrowing anything. They're just putting their dollars in a different form, a treasury security, which is like you taking your money in the bank from a checking account to a savings account. Still dollars. It's just being held in a different account. The Fed has two accounts. They have reserve accounts and they have securities accounts. So it's like if somebody buys a treasury, then their bank's reserve balance gets debited, and then their securities balance gets credited. Just like if you take your money from your checking account to your savings account, your checking account gets debited and your savings account gets credited. You just ask somebody. It's very easy to maybe not to explain, but just to fluster them. Say, what are we borrowing? Oh, dollars? Well, how did they get the dollars? Did they make them in a factory? Come on. It's very easy. Anyway, that's it for today, folks. Don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. I also have the Understanding the Daily Treasury Statement course, well worth it at 99 bucks. And 5-set video course on Forex trading. You can get, I have the bundle of the three of them, the Understanding the Daily Treasury Statement, the 25-hour Forex video trading course, and MMT and value stock selection. If you want to learn how to pick stocks, it's not hard. I got that, and you can get all three bundled together for $295. I used to charge with live lessons, which I used to give. It was thousands of dollars to sign up to those lessons. Now the whole thing, the recorded courses are $295, all on my website. Bye.